Hello, Jim here. Today I want to talk about my best 6 trades last month and how they brought in nearly $2,000 just with those 6 trades. I'm going to talk about why they worked out so well and potentially another strategy, or I could potentially use one of those stocks and make really good money and put very little at risk. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. I did want to mention before I go over the trades that I have my Traders Club meeting tonight. That's what I do for my membership. Anyone who's has the Trader Club membership or the Coaching Club membership can attend. Then I typically record them and then post them. Today we're going to be talking about strategies. I'm going to be sharing some of my more recent strategies, and then a lot of members will be sharing some strategies they're looking at. So it'll be kind of a nice working session where we'll share quite a bit. If you're curious about my memberships, you can take a look in the description. I have 3 levels. I have what I call my investor level. It's $15 a month. You can get it, try it for a week, free for a week. It does get my trades. I typically will post them on Patreon, and then anyone in my membership will be notified when I do post them. And then I have what I call my Trader Club membership, and that's a little bit more. It's $19 a month, and it includes Discord. And Discord is where a lot of the amazing stuff happens. There's a lot of conversations back and forth. There's conversations about different brokers, about different types of trades, about different, taxes, how to get started, some good learning material that's provided. And then I have my coaching club. So if you need a little bit more help, you need some hand holding, you get 2 sessions every month. Usually it goes from 15 to 30 minutes. I advertise it as 2 15-minute sessions. But again, it always seems to run into 30 minutes, which is fine. I can be pretty talkative, and I like taking my time and getting to know people. So if you're curious, want to learn more, please take a look at my description for the video, and there'll be a link to my Patreon, and you can learn more there. I don't require a phone call before you gain access. I just want people to have an easy avenue where they don't, they're not sold a really expensive product. I keep this simple. I keep it inexpensive. It's month to month. Just wanted to share that with you. So if you're curious, take a look. So let's jump right in now. I have kind of thought about a new strategy since I've reviewed these 6 trades. Every month I like to look at like my top 10 or 5 trades. This time I'm doing 6. And the first one being Mara, and Mara is one I'm thinking about. I know a lot of people have been doing MicroStrategy. Mara, in a way, is like a smaller version of MicroStrategy. I'll talk more about it at the very end of the video. But this is the second trade that I've done. I've had another one open since April that's done really well. It's been a very profitable trade. This one I opened December 2nd. At the time it was in the money. It's no longer in the money. I believe it's pretty close to $20, like almost $20. This was a 16 delta. Current price at the time was $18.44. And I brought in $306. The required capital was $1,600. That's not subtracting the cash I brought in. So this number should be a little higher. But it was 152% return. And again, you can do it in a pretty small account. Now, if you're assigned all at once, you would need about 60 or 7,600. But that's just temporary. With the required capital, it's the more important number. That's what you really need, again, because you have the puts, and the puts definitely have value. The fact that you can put the particular shares to someone else, the brokerage typically will give you credit for that as long as you have what's called the level for spreads. But I'll talk a little bit more about Mara at the very end of the video and how I'm looking at a potential strategy for it. In my wheel strategies, probably my spread wheel strategy. So next was 4. I did 4 back on the 4th of December. It's another payment processing company, and it's done really well recently. I think it went up $6 or $7 on Friday. We had a crazy Friday, but I've rolled it again, 97, 50, 90. So smaller spread. A lot of times I like to tell people I start with a $10 spread and then I look to see, well, could the $9 spread, $8 spread, $7 spread? In this case, $7.50 spread was cheaper than the $10 spread, so it made more sense to do it. At that time, it was 104.69. Like I said, I believe they're up as high as 107 currently. I rolled it to 117.25. I believe I've rolled it again recently. Kept the same strikes. In those two rolls, I brought in 592. And this is a really high return, almost 518%. So and here you can see I have rolled it twice in the same month. And since this is part of my spread wheel strategy, I try to roll them more often than once a month. I got hit kind of hard recently because of what happened with Micron and AMD, but Micron has bounced back, which here's another one that I did with Micron, again in my spread strategy, and it worked out really well, 12.5. This was a roll, then I expired it, so it was 190. At one point, they were really deep in the money, and they bounced back too. I believe they're also over 100 currently. And then 160. So I did a short expiration. I just rolled it out a week and picked up some more premium. And I did 190, and I brought in 204 in premium, and I had brought in already 838, and I think that was in less than a month. My required capital is 1795, and again, a really good return, 520%. Does require a little bit more cash on hand if you do get assigned all at the same time. But that's pretty rare. I've never been assigned more than maybe three or four positions at one time. And then AMD is still struggling a bit. It at this point I was 135, 125. It was before it started really dumping recently. I believe right now it's right around 120. But this one I also was able to close. I brought in some pretty good premium. It does have very good premium, 261, and this was almost like a 400% return. So I do currently have, I believe, 4 cash secured puts with AMD, and I think my cost basis would be like 110 or something, 115 maybe. But AMD has worked out really well. I actually recently purchased an AMD laptop, so I've got it sitting over here that I'll be working on here, or will be replacing my work video, or not work video, but my work laptop here fairly soon. Micron, another trade in Micron. This was not related to my wheel. This was just one of my, what I call my go-to trades, which is a vertical put credit spread that's usually 45 to 60 days out, usually right around a 15 or 20 delta. And it was 90.80, and I rolled it out to 117.25. Since then, I've rolled it again, and I've brought in over $500, $525. This particular trade brought in $250, and it's like 168% return. So it did quite well. And then last but not least is BP. This is a fairly safe trade. I like BP. I own several hundred shares. They pay a good dividend. It's just been a good company since I've owned them. I did this back pretty late in December, and I rolled it 28.23, so thinner spread, $5 spread. And I did 4 contracts because of that. And I rolled it out to 221, so I did go out on a monthly basis. Kept the same strikes, brought in another 377, which is required capital 1622. And this is almost like a 274% return. Again, I would be perfectly fine with owning BP. They're a good company, well organized, well managed, and typically pay a fairly good dividend. Now, all these combined, I brought in 1992, so just shy of $2,000 on literally just 6 trades. The required capital was 94.14, so the ROI for the required capital is like a little bit over 21%, which is pretty significant. So these 6 trades, you could potentially make that kind of money. Now for the assignments, it's, if you're assigned all at once, you would need 102,000 to cover all these positions, these 6 positions and the associated contracts. But again, this has rarely ever happened. And the fact that if it's a spread and you purchase the put, you're protected. You can always put those shares to someone else. Plus, if you have to roll it, kind of like what I did with AMD, those puts are worth something. So a lot of times I'll sell the puts and put it towards my cost basis, and we'll take the particular stock down. Like I did that with AMD. I also did that with who else? I believe Dell. So it's worked out quite well, and that's still like almost a 2% monthly return, which would be pretty close to 23, 24%. So those are the 6 trades that worked really well. Next, I'm going to talk about a little bit more about Mara and why I think it potentially is a really good opportunity for another trade in my spread worksheet. So stay tuned. Let's jump into that next. Okay, let's talk a little bit about Mara or Mara Holdings. They're a Bitcoin miner. I don't do much with Bitcoin. I actually don't own any. Mara is the trade that I'm using to kind of learn the in and outs of it. I know a lot of people use MicroStrategy. There's been some interesting articles. There's been a lot of comparisons of Mara to MicroStrategy, mainly because they have so much Bitcoin. They've collected, I think, something like 41,000 Bitcoin, and they produce quite a bit every quarter. So when you look at earnings with these companies and you see, well, it had a 20-cent loss, that doesn't include the Bitcoin that it mined. And I believe their Bitcoin just for last quarter was a couple hundred million. Overall, like I've been doing some ChatGPT stuff. Yeah, they've got 40,435. And I don't know if that was the end of 23 or the end of 24, but that's worth 4.255 billion. And I believe they produced last quarter like 2,070 Bitcoin, which is like 250 million, which again would have an impact on the earnings per share. So you have to almost look at earnings per share in a different light. It's not just purely what they're making, because they're also mining Bitcoins for other companies, as well as I believe they're also doing different types of data processing. Plus, they've recently bought more data warehouses, and they're trying to expand their capacity for producing not just Bitcoin, but other cryptocurrencies. So it's a little bit hard to figure out what they're worth. Now, the beauty of it is they've stayed pretty flat. I mean, this looks like they're bouncing around a lot, but not really. I mean, here they were as high as 31, and they, traded right around 20 for quite a bit. They did drop into the like 14, they get as low as 13, but they stayed around this $20, which is fairly easy to trade on, and it can work out quite well. You can also come over here. We'll jump into bar charts, and you can see they're currently right here, right in the middle of their Bollinger Band. So if you can trade in around the 16, 17 range, and then, if you're trading in the call area, you need to probably be in the mid to high 20s. And they have lots of volume. If we come down here and we look at option prices, we can see that they have quite, kind of like MicroStrategy, they have lots of volume. So you're talking 12,000, 4,000, 18,000. That's for calls. Same kind of thing for puts. 10,000, 4,000, 5,000, 2,000. Plenty of open interest. IV looks good. So what I was thinking, and what I've been doing, is I've been doing 1915 trades. So selling a 19 and buying a 15. And right in this area, at times it will go in the money, but I don't panic. I don't worry that it's going to be called away. But if it does get called away, again, if we come back and we look, what does the calls look like? So if I could sell a call right around 20, it's also it's quite good premium, again, over $1 if you can sell a $20 call. So what that's led me to think about, well, why not, since it's in a small range, why not do something like an iron condor, where the bottom side is the 15. So maybe, you've got a band here for the put spread, And then for the call spread, maybe up here. So that's kind of led me to thinking, plus this would be a $4 or $5 spread in an inexpensive stock, even though it did go up, it's at 1991, but you're talking right around, if you could write the put side around 17, 16, and do the call side around 25, and do a 3 to 4 with spread, you're not putting a whole lot of money at risk. I've done vertical put credit spreads with them, so now I'm looking at, well, maybe I should do an iron condor. I like doing iron condors, especially on companies that don't move a whole lot, but have good premium. And if they have good premium, they're fairly easy to manage if you do get into trouble. So I looked at setting one up to see what it looked like. So here I'm just looking at 221. What if I could do it one time a month? So I could look at doing a 17. And the way you get to this is it's just doing a custom 4-leg, but you can say iron condor and it'll bring the information up. You could try all the different strategies here. This is on the Schwab side, the old network. I know some of you are going to say, well, why aren't you using Thinkorswim? I do use Thinkorswim, but just, I don't know. I'm an old dog and I don't learn new tricks really quickly. So I like going back and using the old environment. And I like what they've done. They've made some updates. So here I can see this link show full quote. So I can expand that and I can see, well, the delta's right at 24. And I'm willing to take a little bit more risk with them potentially. I can see theta, vega. I can see the implied volatility, which is pretty high. I can see the open interest, lots of volume, lots of open interest. I can also see that this is 33 days. So when I do this trade, which would probably be Tuesday, it's right at a month, which is nice. Now I can close this. And so here I'm doing a $3 spread. So I would need $300 for every contract. And then I would look in on the flip side. And if I do 26, I could see, well, delta is right at 28, so maybe I'd want to go a little bit higher. So if I close that, I could go to 27. And again, I can look here. Delta is right at 24. I'm bringing in a little bit less, but it's still a pretty good amount of income. So, and in the 30, if I go back to this Bollinger Band, so we're looking at 27. So you're talking up here for the call. So pretty far outside the Bollinger Band. And then the 17, I believe, right here. So taking a little bit more risk with the put side. So right around here. But you definitely have plenty of room. I typically like to be safer on the call side, so I like less risk on this side, which clearly from the Bollinger Band is less risk. I'm doing 4 contracts since when you do an iron condor, you use only half of the iron condor as your required capital, mainly because you're either going to go one way or the other. You're not going to be assigned on both ends. So if they're both $3 spreads, you're talking 300 per contract. So it would be 81 divided by 300. So we could see, well, what kind of a return does that look like? If I do 81 divided by 300, that's a 27% return. And we're really close to monthly. So I could say, well, what does this look like on a yearly basis? It's almost 324%. So wow, that's a really good trade. That's something. For every $300, I'm being paid $81 for 1 month. So if I do 4 of these, then it's 300 times 4, so 1,200 minus the 372. So, so you could say 1,200 minus 372, 828. So we could say 372 divided by 828, talking almost a 45% return times 12, almost a 530% return. So potentially it looks really good. And this would be only on a 1-month basis. And since you only need, less than $1,000, this is something I could even do in my son's. Now I could also play with, well, I only want to do 2 weeks, but this is a really good return for 1 month, and I wouldn't need to manage it as much. And if it's something he put on, he could do it fairly simple. So make 372, put 1,000 at risk, or you could do more if you. I do, one of the things I've tried to do is if it's a great trade, well, maybe I should do more. So you could say, well, maybe I should do 6 and I'm bringing in 558, and 300 times 5 is 1,500. I believe that's right. Yeah. Three times 5. So 1,500 is what you would have at risk. You'd pick up 558 and the return should be the same. So maybe you should do more contracts, especially if you have plenty of cash to cover it, because you're earning 558. And then within Schwab, you could review the order and then place it. And I may actually do this in Schwab. And I might actually show him how to do this so he can learn how to potentially, at 558, what the interesting thing is he's potentially looking at getting a car payment, and that might cover his car payment. So something I definitely want to keep in mind. What do you guys think? Would you trade Mara instead of MicroStrategy? MicroStrategy, so if we look at, I think it's MSTR, and I believe it's shot up. So yeah, it went up over 400. So I mean, that's a lot of risk. Of course, it did go up 8%, but I think Mara did the same thing. Let's compare it to Mara. Yeah, 8%, because they're both so tied to Bitcoin, but you're putting so much less money at risk. Let's also look at the Bollinger Band for MicroStrategy, just to see if it's a little bit more convoluted. And here you can see it. Yeah, it's big, huge bands. I mean, a lot of people are making good money with MicroStrategy. I prefer Mara also because they do have other income streams. They're doing other types of work related to their data warehousing. They do have more debt, but this article down here goes into a lot of it. It's really interesting. And it does compare it to MicroStrategy and talks about some of the things that makes Mara very similar to MicroStrategy, but in some ways less risk, in other ways more risk, depending on how you look at it. So just something I wanted to mention, see what you guys thought. Is this something you're doing already, maybe with MicroStrategy or with a different stock? I like Mara, again, because if you calculate all the Bitcoin they're producing on a quarterly basis, their earnings per share really don't make sense. It has to be calculated in a different way. Of course, they're really tied to Bitcoin. So if Bitcoin, goes down big time, they're also going to be hurt big time. But when they do that, they typically buy more. So they'll even buy some out on the market when there's downturns. They'll go out and buy more. So I'm thinking it's probably a pretty viable alternative to some of the other trades that I've been doing, and I may do it more in my taxable, or maybe even allow my son to do it in his taxable. So let me know what you think. Is this something viable? Would you do something like this? Do you have other names that may also work really well? So as always, thank you for taking the time to watch, and I look forward to seeing you next time.